Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. It's going to be a great one, too, because we got our tech expert back from vacation, our man, Mr. David White, growling a problem with us out here on a Friday afternoon. It's a beautiful thing. Welcome back, man.
It is. Well, glad to be back.
Totally, man. This quote is by Mario Giacadano. Be strong. Go with your hat and believe in miracles, because anything can and will happen. Market-wise, let's take a look at it out here. Dow Industrial's down 170, NASDAQ off 33, S&P's off 18, gold contract up $13.30 at $1,221 an ounce. Silver up 9 cents at $16.47 an ounce. Platinum up 13 at $1,231 an ounce. Copper flat at $2.75. Light sweet crude, there's no hope, folks. Down 56 cents at $48.24. That baby is going into 32. That's going to be a total mind blower. Yes. Bonds, the ever-ready bond market refuses to back off. 10-year up 17 ticks at 128.21. 30-year up 27 ticks at 147.23. King dollar down 427 ticks at 92.17. Now, King dollar, folks, tested its 2010 high. My take, that's it. Over, done. That was the test. Started in 2011, took that long to test it. Tested it out daily, weekly, all of the above. Euro up 48 ticks at 118.40. And the yen down 111 at 118.55. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so check it out. Our markets here, so you had a big expansion yesterday after the downdraft. You get to a higher high today. It gives it up. We do 728 million, which is short volume, light volume, by the way. But what you had, you got to a higher high, couldn't hold price, it backs down. So the larger picture, folks, is that this S&P wants to get on 1805. Right now, we're trading at 2036. The shorter picture, what I expect, is that you're probably going to see another bounce on Monday. We're not going to get to the highs. These are bear market bounces, and I don't expect another 300 bucks, by the way, because Europe got absolutely toasted. Europe gave back everything that it had yesterday. We didn't give back everything, folks. Europe was up 2.5% to 3% yesterday, gave it all back today. Like, wow. Quick, fast, furious, big time. Our own S&Ps, though, you know what? The 2050, 2060 can get tested again. You get a test on lighter volume, that's it. If you're a trader out there, it's time not to sleep, folks. Why? Because it's a trader's paradise, and you can expect that for the next 6, 8, 9 months.
I came back from vacation early because the last week, and it was like, I felt like that Godfather movie where the guy goes, they just keep dragging me back in. And I looked at it, I said, I got to come back.
Once you're in, you can't get out.
Yeah.
We go over to the SPY and want to see this correlation inside the SPY, folks. What you have inside the SPY is this. You have that high volume low that's hanging out there at 181.92. You're trading at 204 right now. Bottom line, this little baby, you know, when we came down with it was 200 million, I believe, 203 million shares on the way down. Yeah, 209 million on the way down. You got to a higher high out here today, and you're going to love this, okay? This is really important to understand in the context of where the supply is versus the demand. 147. And then it gave it up. That's a big number, folks. NASDAQ Composite, we take a look at that. Well, here, let's just go to the 3 Qs first. You take a look at the 3 Qs, same setup in the 3 Qs. What we did with the 3 Qs today, you did 41 million shares. You had come down on 66 million. And what you have hanging out there in an extraordinary way is that high volume swing low, October 15th at 90.33. And, you know, when we talk about that high volume swing low, folks, it's something that you absolutely want to wrap your head around. And I'm going to go over there right now. I'm going to go over to Google. Google has already broken your October 15th swing low rather. And if you want to see how this works on the out of time in the trade, you get down to 515. We did that on the 16th. Actually, Google went down even further. It went down to 515. You had the volume down there. That was 5.9 million. And then Google did the counter trend bounce first to 568. So it went 516 to 568. Then what does it do? Gives it up on price again, goes down to 497. Does a counter trend bounce with light volume up to 543? And guess where we are? We're at 500 right now. You broke swing lows. We put this on a weekly basis. What you're going to see is that the aspect of how we're down there, this week we did 12 million shares versus the lows there of 19 million, but it couldn't get out of its way, so that's going to be building more cause for lower price. You know, it's pretty intense. That's the bottom line. Gold contract. What do we have with gold? Gold wants higher price, folks. The dollar index out here today got to a high. Well, we'll do the dollar in a second. Let me just show you what's going on with gold. And I expect what you're going to see it's going to be next week. Gold right now is trading at 1222.10. Gold wants to basically get over the swing point of 1233. So we'll see how it attacks that swing point, number one. It had the volume going with it today, which is really nice. XAU, HUI, all the above, they all went. Bonds. What do we have with the bond market? Bonds want higher price. Bonds look like they're an ABC structure on the way up. But where we're going right now is that we're going to go into the dollar. Why the dollar? I think the dollar, if you get the dollar right, folks, the dollar is going to be the most important move out here. The reason being is that this is the dollar. I'm talking right here. I'm talking the dollar index, okay? That's the euro is 60% of it. The correlation goes that what the dollar has just done is that it basically tested its 2005 highs. And it's been trying to do that for quite a while, okay?
I've got a question here.
Yes.
And that is, forever,
right,
every time the dollar ticked up, the market tanked.
Yes.
Something fundamentally changed somewhere along the line in this last move from the dollar index at 80 all the way up to 92, and I still can't put my finger on what is physically changed.
And folks, this is really important what Dave's talking about, because I can't either. So watch what we're talking about here. So the last 6 months, the dollar went from 80 up to this 92, and the market loved it, absolutely loved it, okay? And prior to that, the market liked a weak dollar. That's the reality. Now, all of a sudden, the market liked the strong dollar. And what's going on now, folks, the market can't stand a weak dollar. If the dollar moves down at all, the market goes down like in 2 seconds, folks, okay? It's tick for tick, okay?
But it blows my mind that changed, and I still, normally you find after the big move what happened.
Right.
But I'm still up here at 92 going, it doesn't look any different to me than it was at 80.
No, I agree. And I'm trying to figure out right now why the market can't stand a weak dollar when it's going down. Bottom line, though, the correlation is there, number one. So what do you do with that correlation? What you do, to me, that correlation is saying whatever is out there, we'll find out.
Yeah.
Okay? We'll find out what that is. But this parity with the gold and the dollar is pretty dramatic.
If you're in Europe and you think Europe's going to hell in a handbasket,
right,
you live over there.
Right.
You see everything is going south. You start buying U.S. stocks. You have to buy dollars to buy U.S. stocks.
That's right.
Dollar goes up. Your stock is now denominated in dollars.
Yes.
You're still getting that boost from the dollar on the stock, even if it stays the same.
That's right.
Because your euro is going down.
That's right.
So your stock doesn't even have to go up. You're better off in Europe buying U.S. equities.
You have been dramatically.
Right.
Yes, dramatically.
So the only thing I can think of is the worst it gets until whoever's the last guy that buys a stock in Europe is the only reason. And once that happens, and then that correlation breaks back to the way it was, where the U.S. market hates a strong dollar again because the exports start getting hit.
We'll see. What I'm going to do right now, I want to show you something, because when you do trading just the dollar index itself, folks, okay, it's liquid and you can get volume on it. But because the UUP has been trading for quite a while, when you see the volume characteristic in the UUP, Dave and I, volume-wise, will tell you that this is insanity.
Yeah.
And this is pretty intense, folks, okay? The UUP went up last month, okay, and you did 29 million shares. Well, guess what? You're going into 123 million shares.
Yeah.
It's saying that, guess what? Bottom line is this dollar wants to pull back.
We're going to have some giant action in these markets in the first three months of the year.
Action, baby. No time for sleep.
Yeah,
no time for sleep. It's a beautiful thing. Dave White, Tom O'Brien, all these tigers and tigresses, you stay right there. We're going to be coming right back. Dow Industrials finished down 170. NASDAQ off 32. S&P's off 17. Gold up 14.40. Silver up 10 cents. There's action out here, folks. We're going to be right back.